The webinar today is dedicated to one mindset. It's not a strategy I will share, but it's a mindset. It's based on candlestick. To be more precise, it's based on a candlestick and a trend line or a moving average, either of them, whichever one you would prefer. And of course, as usual, today's webinar is delivered to you in association with A to Z Forex and sponsored by Trio Markets. And if you're wondering who I am, if it is your first time participating in this training series, my name is Yakub Ibrahimov. I call myself the Fibonacci King. This is what I am and who I am. I love trading market with pure market analysis, with no indicator, but mostly just simple Fibonacci and two moving average, 50 and 200. This is the structure that I take. Now let's go to the main part of today's webinar. Can anyone tell me what is a pin bar? It's in front of you, but can anyone tell me what is a pin bar? Have you ever heard of this term? Stick, small real body, long wick, short body, pin bar candlestick. I don't know. I would love to know. Well, I'll just make it simple and straightforward for you. Although there are many different definitions for the market, and some of the so-called market traders define pin bars as reversal signals, etc. What I will tell you is the fact that pin bars are basically the levels where the market has a clash between the bulls and the bears. So it is the level where literally clash of titans take place. As an example, in this specific example, the first one over here, you can see that first the bulls take it upwards and the market continues on upwards move. You can see that's where the high takes place, and then the bears come and say, wait a minute, this is enough for you. It's time for you to reverse back, or at least it's time for me to show that I'm here. That's more precise level. Or in another word, over here, bears take control of the market. They continue, and then bulls come in power, saying, wait a minute, don't forget, I'm the bull here. You cannot just overcome me and just walk by me. It's the time for you to obey some rules. This is basically what a pin bar looks like. You would see a pin bar having a long wick. This is the kind of a stick part that you see with a small body. And it is the level where you see the real clash of titans, the real clash between bulls and the bears. It's not going to be the level where we would just say, okay, it's a pin bar. Let's go. Let's dive into the market and see how much in return we can get. But let me just show you one thing: how people generally tend to, or losers generally tend to trade the pin bars. They would see the pin bar occurring like this, and what they would do is that they would go ahead and in this occasion put a pending sell order just below the lowest low of this pin bar, and whatever the distance between here and the total top of the pin bar here, they take it, multiply it by 2, and they put it as their TP target. So this is the loser way of trading. First of all, who can guarantee you that just the look of the candle will tell you that the market is going to be reversing? Or who can tell you that just because of the distance between the high and the low of the pin bar, you can define your take profit by 2? So it is some kind of a misconception in the market. So what I'm going to be doing now is I'll go back to our trading portal and show you something about the market. This is, let me delete the Fibonacci over here since it's not really relevant. So this is what you would generally need. You don't even need the MACD. It's from the previous training. So when you are analyzing market based on a pin bar, you either, well, not either, you definitely need to look 1 hour, 4 hour, 1 day, or higher time frames. So this is the levels that you generally tend to look at the market for. So once you see the market is going on a structural base, and you see that you have a pin bar occurring, and you want to take advantage of this pin bar, one loser way is basically to look for a reversal over here just blindly. But what I will teach you today will enable you to follow the trend rather than just blindly entering against the market. And here are the structural definition. Okay, a pin bar that we are talking about, all right, is defined as, I'm not going to give it a name, morning star, doji, or I don't know, whatever. We are talking about a pin bar, and we will call it a pin bar. When I was a young trader, I used to call it sword candle. So the reason why I call it as a sword candle is that it feels like it is a sword. It has a small handle, just like over here. This is a pin bar. Let me highlight it for you. This is a pin bar over here. So you can see that there is kind of a small handle over here and a small shield part of the candle, which is the body, and a long sharp part, the wick, the tail of the candle. So that being said, a pin bar is defined in two ways. So I will make it clear for us. Let me get my... If it is a bearish market condition, so imagine that this is red, bearish. B stands for my handwriting is amazing. So this is a bearish candle. Okay, so it is supposed to be a bearish candle, and the way you look at it is that you have the handle of the sword. There is a small shield part, which is the body of the candle, and then there is the long wick, the sharp part of the sword. And if it is a bullish one, it needs to be the exact opposite of it. So you will have a long sharp part, small handle, and a shield part of your sword. And the way you need to define it is the following. In order for you, this is bull. So in order for you to define this as a relevant pin bar, this one needs to occur right after a bearish candle. So it needs to come like this as an example. I know my handwriting is just amazing. So it needs to be coming like this, and you would see that there is a pressure from the bottom of the candle. So the bulls would be pushing it upwards. How you would be trading this specific scenario? Let's try to find an example of this specific case. And what else can be better than this one? So You can tell me that, Yagub, this is a reversal structure. Yes, I know it. I just go for a buy. So what can make you stand out from the crowd if you are using this specific strategy? Number one, as you can see, I'm using a moving average with this specific candle. It's a very simple candle and one moving average. And this moving average is 50 simple applied to close. Simple moving average, 50. And I use it on H1, 1 hour time frame. So what I do to make me stand out from the crowd? Number one, in order for me to enter this position on a bullish side, I basically would be putting a pending buy order. Once again, I would be putting a pending buy order just 1 pip above the highest high of the pin bar candle. I hope you are writing it down. And I would only do it if the candle has closed above the 50 moving average. So you would be telling me, would you have done the same if this candle was right away over here? So if it was the case, I would not have traded this pin bar because it is not a reversal candle in such occasion. Is it clear so far? Okay, we have some questions. Is it on H1? Yes, it is on 1 hour period. And you only do it, well, you can do it on any time frame above 1 hour. But since I love trading 1 hour, and 1 hour is one of those time frames that is not subject to manipulation, so I recommend you to use it based on 1 hour. Is it a trade based on a price action? Well, it is a price action because we follow the action of the market. We follow the price momentum of the market, and we only go with it. We do not want to go against the trend. So another example over here where we shouldn't have entered the market is this specific scenario. You can see that there is some kind of a pin bar over here, but one thing you need to understand is that this is not really the pin bar definition that we have agreed with you. So it is the long part of the pin bar which we were supposed to have is showing upwards, not for downwards. That's number one. That's number one thing that we need to keep in mind. Number two, the market has closed below the moving average, which is a sign that the market is telling that it is not really a bullish development, but there is a likelihood that the market can go downwards. So what should you do in such occasion? Let me delete all this stuff on our screen because it's a little too crowded. So imagining that on a bearish candle, this is the bearish candle. Again, Picasso Yagub is in action. So imagining that this is the case, the long wick is over here. This is bearish candle, and this is a bullish one over here with a small sword-like action below. So imagining that this is the case, and there is, let me see if I can change the pen color. Yes, there it is. And then there is this moving average. Okay, so imagining that this is the case, and we want to understand what we should be doing about the market. And what we do is the following. Let me change again the color. We look for the following candle. If the following candle is somewhat like this, and it closes very close to the 50 moving average, what we should do in that occasion is the following. We do not buy. We will not buy once again. But instead, we will put a pending sell order, or we will look for a pending sell order just a couple of pips below the lowest low of that most recent wave that we have had, like as an example over here. So we will be waiting for 5 candles. We will be waiting for 5 candles. Okay, so if that is the case, and you wait, this is the first candle. So after that, we wait a maximum 5 candles, 1, 2, 3, 4, and you see that at the 4th one, the market broke below the lowest low, and your position obviously triggered. In such occasion, your stop loss becomes the highest high of the wave. So from here to here becomes SL, your stop loss. So this is your SL. Whatever the number is for your SL, your stop loss from here to here, you multiply it by 1.5, and it will be approximately up until here. And this becomes TP, your take profit. For those of you following me, know that I use only 1 to 1.5 risk-reward ratio. This is my target. So your SL multiplied by 1.5 equals your TP. Okay. In another case, though, if you would have seen the market that did not really trigger in let's say 5 candles past, but you don't have an entry, you either ignore that opportunity. 5 candle, there is a question, what do you mean by 5 candle? 5 candle meaning 1, 2, 3, 4, 5. You basically need to look for 5 of these candles opening and closing in total after this scenario happening. This is what a candle is. Okay, I just presume that you understand what does a candle mean. So that being said, this becomes your target. And let's now look at the same thing on a bullish side. So I'm gonna again go back to my Picasso-like drawing skills, and I will draw the bullishness. So imagining that we have this bullish candle. So this is a bullish candle. Green represents on my chart always bullish. And right after, you see that there is a bearish pin bar occurring. It doesn't necessarily have to be on or crossing through the moving average, but well, let's imagine that it is above the moving average. Let me just put another one over here. So we imagining that this is above the moving average. So what we will look for will be the following. We will not really look for exact reversal of the market, but indeed we will look for the opportunity to exit the market if we are going to be selling at this occasion. We will look for for exiting the market at the 50 SMA. So I either would not enter the market, or I would wait until the price hits the 50 SMA. So what it means is that you still can trade. However, you might have a less than usual or less than anticipated risk-reward ratio. A very good example of this bad scenario is just over here. So over here, you can see that we have the pin bar occurring. You have a bullish candle. Right after it, you have the pin bar. And you can see that the market goes kind of bearish, but it doesn't really continue on our direction very well. The reason behind it is the fact that the overall trend is bullish. You can see the slope of the moving average, this red line, is going upwards, and the candlestick are above the moving average. So that's the reason why we do not either trade this, or when we are trading it, we have a small take profit ratios. So now now let's imagine that this, let me delete this once again. Let's imagine that this candlestick again continues like this. We have a candlestick, and we have right after it a pin bar occurring, just like that. And we also imagine that the moving average is just like this, above the candlesticks. So what it tells us in such occasion is that the market is actually on a bearish move, and we should be expecting to enter the market just above the lowest low of the pin bar. Just below the lowest low of the pin bar, and our stop loss needs to be pretty much just above the highest high of the pin bar. So this becomes our SL. This is our sell stop level. So can anyone tell me what would our take profit be in this occasion? So that's it. Whatever our SL would be, we multiply it by 1.5, and that becomes our take profit target. Okay? So this is so far a small introduction to it. Here is my proposal, and I'm open for your suggestions. I would like you to go ahead and open yourselves a demo account at Trio Markets. If all of you do it the same, we will know that all your charts will look the same. So, and I would like you to practice this small strategy that we have discussed in a demo account. Okay? And what you should do is to send me your daily performance, whatever result that you are getting, on my Skype account. My Skype is very simple, my initial, Y, and my last name. Just my handwriting is amazing. You know what, I'll just do it over here. It's much better. So my suggestion is, I'm just going to write it. Go ahead and open your demo accounts, and make sure that you send me on daily basis your performance for this specific strategy on my Skype. This is my Skype ID, Y Rahimov, and I will be more than happy to help you. After 2 weeks, we will host one more webinar on this specific scenario, and I will use your performance samples, your own examples, where you have made mistakes, or you used it to the exact right direction. This way we can learn by practice. How does that sound? Do you want to participate in such kind of challenge? This way it wouldn't be just a passive way of learning. So Anyone saying no? So far everyone is saying yes. Ripple yes, Nickel yes, Ricardo yes, Abhinav yes, Hubert yes, Samir yes, Pizzo yes, Geza yes, Sekar, I don't know, he says S. I don't know what it means. So I'm gonna be sending you the exact broker that I want you to have the demo accounts. Again, I don't want you, I'm not asking you to deposit anything because at the end we are learning first. So I will send you the over the chat. I sent you all a link. Can you please confirm if you received that link? Basically, what you do is that go to A to Z Forex, you go to directory, and then you choose the Forex brokers, and you have the Trio Markets there. So I would like you to do it on Trio Markets demo account so that everyone has the same thing. Once we go through the results, everyone would be able to compare it on their own platform so that we don't really go crazy. Okay? So now that everyone accepted the challenge, this is the time for the questions and answers section. This is the time I'll stop the recording. Recording will be available on A to Z Forex education section, Academy. And you will be able to go to Forex video, and you can share it with your friends, invite more people, and watch it as many times as you wish. Okay? Bring on the questions, guys. Come on. So when I asked if you can trade based on this strategy, some of you saying it's simple and we go for the reversals. Actually, you are not going for the reversals. If you look at the strategy, once you view the recording multiple times, you will understand that we do not look for reversals. We look for continuation with this strategy. We look for continuation. And back to Nico's question, which pairs can I trade with it? Pretty much in any pair or any stock or any indices you would like, you can trade on it. But try to stick to euro dollar or pound dollar for the trial period for the next 2 weeks, so that we can stay on the same side. I don't want to go look for 15 different currency pairs. So let's look at this question. Juraj is asking, I think he's from Lithuania, where to place pending orders in previous example, bullish candle, bullish pin bar. Bullish candle, let's say it's over here. You have a bullish candle and bullish pin bar. That's not an entry for us. It needs to be bullish candle and a bearish reversal or pin bar candle. And if that is the case, we do not, and the market is above the moving average, we do not trade that. We do not trade reversals. We look for continuation because our moving average is actually telling that the market is going to be bullish. Okay, there is a good question. What is the difference between bullish and bearish pin bar with the longer wick in the top of half? I hope that I understood your question well. So you have this kind, let me just make it clear for all. So we have this bullish candle, and right after it you have this pin bar. Yes, the one over here. So if the pin bar itself closes or makes a higher high and closes above the previous closing level, okay, that's a sign that you are kind of in an indefinite trend, where you don't really have a definition of the trend and you are in a shaky environment. What most people will do in the market is the following. They will go ahead and they will try to sell somewhere over here. But the reason why I tend not to sell at that level is because of the fact that, as you can see, I'm selling to another support level. And my other support level is actually over here. So I don't want to sell to another support. It just doesn't make sense. When I'm selling, I want to sell breakouts. And when I'm buying, I want to buy breakouts. So I want to buy above the resistance, or I want to sell below the support. So that's what we would be aiming for. And as long as the moving average overall is showing upwards for us, it just is not logical for us to consider selling. So that's the main reason why we don't trade this kind of formation. That's why it is not a candlestick formation. It is a price action candle trading. Okay. There is a nice question from Nickel. Is it better to put pending buy sell stop orders few pips below or above the pin bar, or just set the exact high low of the pin bar? You need to look for 1 pip above. If you are buying, it's 1 pip plus your spread. If you are selling, it's just 1 pip below. Okay. However, you need to apply the logic that we discussed. So in case of the market move where you are looking for bullish reversals, if you may call it a bullish reversal as an example over here, it needs to be above the moving average, 50 simple moving average. If you are trading the bearish continuation as well, it needs to be below the moving average. Let's just give another example over here. So this is a perfect example right here when we would be trading. So our target would be just somewhere over here, and whatever it is from here to here multiplied by 1.5, that would be our bearish target. And unfortunately, the take profit just doesn't hit. So not all the time you're going to have a take profit hitting, but at the end, you need to be cautious. You need to combine this strategy with your other proven strategies and use this as a mean of confirmation for your overall strategy. Okay, there is another question. Will I teach pivot with stochastic strategy? Well, if you want me to teach, maybe one of our following strategies would be based on it as well. So why not? Just drop an email to info@a2zforex.com. My colleague's name is Jake. So Jake will do his best to communicate all the webinars that you guys want to me, and I'll be more than happy to host webinars on the sections that you really need. So guys, any other question related to this strategy only? I'm ignoring the other strategies that you are, or other questions that you are asking. So far, I just want to thank you, all of you, for being part of today's webinar. Just keep one thing in mind. Bullish or bearish, we do not look for reversals. We are not the people who would trade the reversals. At the end, if the trend is bullish, you will not get much out of the bullish market's bearish reversal. We are here though to make the best out of the continuation. In another word, we are here to trade the trend following strategies, which would give us the best available opportunity in the market. That way we can get the best out of the market overall without really burning ourselves. So that's the reason why I've included this silly man over here looking at the bullish market, imagining that it's bearish. Don't be that man. If it is bullish, it is bullish. If it is bearish, it's bearish. Thank you once again. Don't forget, open your demo accounts. You have approximately 2 weeks from now. Try to share your results on daily basis with me. You will maybe have 4 signals in a week. You will not have everyday signals, but you will have signals. Your targets will be based on euro dollar and pound dollar, and share your strategies with me. Or even better, let's do this way. Let's comment about your results. I will create another forum here, a forum topic in the A to Z Forex forum. It's called Market Analysis Forum. So I'll create a section over here called Pin Bar Strategy, and let's comment everything in there so that it is fixed there. I don't want to do much about Skype. So shall we focus on it and make sure that we have the results? I want to see your performance. Okay. Any other final questions before we finish it up? Thank you very much for your attention and all the information. And I look forward to hearing back from you for the next 2 weeks and making sure that we have the results ahead of us. Okay? For now, have a nice day. And once again, for those of you celebrating the New Year, let's make 2016 a remarkable one. Happy New Year to all of you. Bye-bye for now.